welcome to the podcast. Josh Knight from Octane Capital, thanks for coming on.
Thank you very much, thanks for having me.
Josh, obviously we've known each other for a little while, but for the benefit of the audience, who's Josh, what are Octane, where are they in the market, how do they help their customers?
Sure, so yeah, my name is Josh Knight, I'm Octane Capital Sales and Marketing Director. We're a specialist short-term lender, so we offer short-term loans to property investors for a range of different reasons, but one of the most common is to help them buy, refurbish, improve the value of property, whether their goal is to sell for a profit or improve its yield to keep it within their portfolio. We've been lending for the last 8 years since we launched back in early 2017,
Right.
Close to £2 billion out the door since then. And my role is to originate, to help brokers like yourself and their clients find the right funding for their deals.
Oh, brilliant. So 8 years, so Octane is still a relatively new business then in the market.
Yeah, we're what you would call a non-bank lender. So we have a funding line that we work closely with that provide us with the funds with which we lend. And yeah, despite being quite a young business, we are scaling and growing very quickly. We're lucky in that our founders, this is not their first rodeo, so they've started, scaled and exited a previous specialist lending business before Octane. So we had the benefit of being kind of well known right from when we first launched. But nonetheless, yeah, we are scaling very quickly.
So I mean, the reason I wanted to have a chat with you today was just around, so a lot of our clients will come to us, they may be existing buy-to-let landlords, or they might be thinking about getting into property as a thing. So obviously sports people, they'll be thinking of, okay, everybody talks about property.
Yeah.
This is what I should be doing.
Yeah.
But when we're talking to our clients, we're sort of explaining, right, understand why property. And when we got talking over a coffee, a few years ago now, we had some really good quality conversations around, well, actually, it's not just about buying a property and renting it out. There's all sorts of other things that you can possibly do within that short-term lending can support with and actually manifest. So what is it that Octane are seeing in the market that people are doing that are possibly achieving those values?
Yeah, so I think you're right. I think if you went back pre-Liz Truss's disastrous mini budget, buying single tenancy properties and letting them out was a pretty safe bet.
Yeah.
You know, if income's your objective, even borrowing at high loan to values, that worked as a strategy. But what we've seen now is that rates have gone up so steeply, and the average yield of a buy-to-let in some parts of the country is now under 5%.
Yeah.
Back in London, obviously they're higher where we're sitting now. So the result of that shift in the market is that we're now seeing investors going after asset classes that can deliver a 7, 8, 9, 10% yield. So the hotspots that we see are HMOs, multi-unit blocks, serviced accommodation, and semi-commercial as another big one. And where we come in is to help investors buy those properties. Okay. But quite often the investor is looking to add some value or change the use. So in the case of HMOs, often you buy a house and convert it into an HMO. And that's really what our product is designed to help with.
Okay. So if I'm trying, like, from a customer's perspective then, they've seen a house and they go, oh, okay, what can I do with that house? What would that look like in terms of, what would good look like from a lender's perspective of going, well, okay, that house can lend itself to a HMO?
Yeah, well, HMOs are all about location. So the best HMOs are in city centre locations, near a hospital or a major university. The problem you have with that is that most major cities in the UK have what's called an Article 4 direction, and that removes your permitted development right to convert a house into a small HMO. Okay. It essentially means you just need to apply for planning permission, which can be a bit of a long, drawn-out process. But what we see most commonly is investors buying houses in areas not subject to Article 4, and that means that you are within your permitted development rights to convert that house into a small HMO, up to 6 bedrooms, with no need for planning permission.
Okay.
So then that turns from a asset that might deliver a 5 or 6% yield into one that on average could deliver a 10% yield, and that's where it gets interesting.
So we're fundamentally saying, right, because that single tenancy isn't quite delivering the returns that I want, and with increasing interest rates and things, that's possibly tighter. Well, actually, what I'm looking at is maximising the value of the assets that I'm possibly acquiring or possibly already hold.
Yeah. Yeah, I think the benefit of an HMO is clearly that the yield is substantially higher. I mean, in some cases it's 4 times, 5 times higher than a single tenancy property. So clearly income is the goal. But also there's other benefits in that you have, you might have one void, but you have 5 other tenants.
Got you.
Whereas if you have a single tenancy that comes to term, it might take you a while to find a new tenant.
So when it comes to sports people, then that could be probably quite an attractive opportunity because actually they're minimising the risk. But when we go back to the why, it's like, well, actually, that can produce income, producing assets for me, but actually in one place.
Yeah, of
so
course.
that's probably quite an attractive option for them. Does any like case studies like stand out to you that you possibly recently worked with? You know what, actually that was a really good success.
Yeah, we completed a deal. Well, I personally completed a deal a couple of months ago. That I think it's probably my favourite ever deal in the 7 and a bit years I've been doing this. One of our clients bought a house that had been converted into 3 flats in Bristol. Now Bristol's actually a hotspot for HMOs because it's one of the only major cities where about a third of the city has no Article 4 direction, which gives you the license to do those HMO conversions without planning. But what was interesting about this deal is that because there were 3 self-contained flats, our client could convert each of them into a small HMO.
Okay.
So we did 3 4-bedroom HMOs within one building.
So 4-bedroom flats.
Yeah, so 3 individual self-contained flats, and each of them was individually converted into its own 4-bedroom HMO.
Wow, okay.
So 12 rooms in total.
Fantastic.
And that one deal will generate a 6-figure income annually for our client. And they only needed a 25% deposit on the way in, and we funded the rest.
Oh, fantastic. And so there might be a bit of a misconception then with HMOs, that HMOs are these monstrous, great big properties which are a fire risk and this and that, and there's all this legislation around them, which obviously there is, and rightly so, because you've got multiple people living in one occupancy. But when you position that as a flat, I wouldn't have necessarily thought, oh, that could be done. But it's just possibly thinking about that in a slightly different way, I suppose.
Yeah, so C3 dwellings, flats or houses, can be converted into HMOs. Clearly, if you own one leasehold flat in a block, then you'd need agreement from a freeholder. You might have party wall agreements. I think you touch on a good point there, and it's important that people know that HMOs carry risk. As a landlord, you have a number of regulatory requirements that you have to keep abreast of. And the key thing there is, if you're not experienced, surrounding yourself with the right professional team. A good broker to help you get the right funding, but also a good managing agent, perhaps to help you tenant the property and keep you on top of all of your regulatory obligations.
No difference to sport then, really, is it? I suppose it's like if you're looking at it from a team perspective, everyone's got their different skill sets, but you need to be at a high level to help the team collectively win. I know that might sound a little bit cheesy, but it's fundamentally the same concept.
Yeah, and it's a big misconception actually. This is something that I encounter every day, is that you have to be a really seasoned, experienced property investor to get a lender like us to lend to you, and it's just not the case. Most people that we lend to have a 9-to-5 occupation that isn't property, and this is very much a side hustle, as you said at the start, something that you're doing to try and generate future income to support you perhaps when your income subsides. Yeah,
that's a really interesting point. It comes back to the why, and there is possibly some misconceptions around things about property development, short-term finance. So for example, short-term finance, there might be this misconception of, that's expensive and it's risky, but actually you just need to view it slightly differently as a tool.
Yeah, I think, look, if you went back 15, 20 years, bridging, when it was in its infancy, was seen as kind of lender of last resort. I have no other choice but to use a bridging loan to bail me out of the situation. Now it's completely different. A product like us is used by, both experienced and inexperienced property investors to help them on their journey to achieving their goals.
And I suppose that would be just an education piece around the client needs to look at a property and go, what are its options? What can I do with this? Rather than just looking at it as it stands.
Yeah, of course. And the other thing is that, look, income might be your objective if you're looking to keep the property in your portfolio, but we see lots of people buying property, adding value, and then selling them.
otherwise known as a flip, right?
Yeah, a flip. And there's loads of options. Again, it's a misconception that, to add value to this property, I need planning permission. There are so many options within your permitted development rights that you don't need any planning permission to exercise.
Okay.
Loft conversions, extending the property to the rear or to the side. You can do a double-storey rear extension of up to 3 or 4 metres with no planning.
Wow.
Converting a garage. And we're seeing people buy property at good prices, add value, renovate them to a high standard, and then sell them and keep the profit.
We're in the industry, so we're understanding it, and we're seeing it, and we're seeing some good results from it. But if you were to give any sort of assessment of a project, so if somebody sees a property and go, I fancy buying that because I think it's got this or that. What would be the first things what are the first questions, and how does a lender appraise whether does that work or not?
So for us, the biggest thing, so when we're looking at a refurb, for example, we look at what's the property worth currently, how much are you spending refurbishing it, and the key one is how much will it be worth once those works are complete. And that third number is arguably the most important. It's what we call the gross development value, the future value of the property.
Yeah.
And the biggest thing that I'd say is do your homework. So when you're looking at a property, let's say it's a 3-bedroom flat or a 3-bedroom house, for example, that you're renovating to a high standard, and you think you can sell it for £500,000 post refurbishment. Rightmove is a great source of data. Look at sold comparable information. Are high spec 3-bedroom houses transacting at £500,000? Because if they're not, it isn't worth that.
Yeah.
And we see investors sort of go into deals because they've spoken to an agent who's told them what they want to hear, and the numbers just don't stack up.
Yeah.
Fortunately, though, that all comes out to wash either when we first look at the deal or when we have it valued.
Yeah.
So we like to think that clients don't go into projects with their eyes closed.
Yeah, and that's a really good point as well, because nobody wants to get their hands burnt, do they?
Yeah.
And that's probably it can be quite an intimidating project to take on, especially if it's your first development, where you don't want to catch a cold, where the project costs overrun, you don't get the value, you get stuck. But I suppose coming back to your point around having a good team around you, that's what that's for. And like you say about the gross development value, it's data, isn't it? It's data, it's facts. It's not I think that'll get this, I think it'll get that, and then obviously you need to be realistic to close those numbers out.
Of course, look, ultimately property values are driven by demand. So, your property is worth what somebody will pay for it.
Yeah.
And if people aren't paying that price for a similar property in a similar area, it just isn't worth that.
Yeah.
So, and then, there's a phrase in our industry, gold taps don't increase a property's value. And that's another misconception that, my property is going to be really high spec, and that means it's worth 10% more. It just doesn't.
No.
Square footage is what drives fundamentally property values.
Okay.
You might get a slight premium for a good finish, but not a huge one.
And throughout the process, then, so I've found the property, I think I can add value to it. I'm engaged in the process. Throughout the process, the lender or yourself are playing an active part in making sure this works, because obviously you're invested as much as the client, right? Because obviously you want to make sure that materialises on the exit.
Look, we just won't lend if it's not a deal that if we don't think that it's a good deal for the client, we just won't lend. So a great example is, if we're doing a flip where the client plans to sell the property post refurbishment, we would expect them to see at least 10% net profit after fees and interest. If from looking at the deal at the outset, or from when we have it valued, it comes to light that they're not going to make that level of profit, it's likely we just won't do the deal, because we don't want to fund a deal where the client's not going to make money.
Yeah.
This is short-term lending. People want to get in and get out, and we want the client to be aligned, or we want to be aligned with the client in terms of we want them to be motivated to achieve that profit. And if that profit's not achievable, then it's not a good deal for either party.
Will you get involved in any advice side of it? So like you say, right, okay, the client's got this idea, but we're worried about the GDV. Is there any consultancy part, or is that on the client where you say, well, actually, maybe if you looked at doing it this way, or maybe you've got an experienced contractor involved to do the work, maybe you might view a project differently, or is there?
I think that's
that
probably
more
outside
on the client?
the realms of what we. I mean, my view and our view is, it is our duty of care to tell the client if their numbers don't stack up.
Yeah.
And often we can spot that pre-valuation.
Okay.
And a great example of that is, I had a deal this morning that I was looking at where the profit on cost was coming out at 60%, and that's just way too high. Now, what that does to me is it flags that the client's got their numbers wrong. Okay. Either their cost of works is too low, or their end value is too high, or both. So it's my duty to say, I don't think your numbers are realistic.
Yeah, okay.
You know, before you commit to evaluation, and it works the other way too. But no, we wouldn't advise as to what you could do. But that's where a good broker can come in that's funded lots of these deals before.
Yeah, and say, if you thought about that, maybe instead of doing it that way, maybe a loft conversion, or maybe convert the garage, like you were saying.
Yeah.
Thinking about the property, and I say power team around you. In terms of, so your example there, you've said around it being, the numbers look too good. Yeah. Is that what you mean? Like the numbers just look, hang on a minute, that's too good to be true.
Yeah.
Sense checking that a little bit, and
yeah, again, like it comes back to my point about use sold comparable data that's publicly available.
Yeah.
And often people go into deals, you know, they have a conversation with an agent who's told them, you know, really what they want to hear, and they've based their whole model on that agent's opinion. And of course, speaking to local agents is important, but you know, look at what properties are actually transacting for. And often, if your profit on cost is north of 40%, you've probably got some hope value in there.
Yeah, okay. And like I say, it's like anything, isn't it? Like the cost of the works you're going to need to do, apply contingency.
Yeah.
But also at the same time, apply contingency to that GDV potentially that you're going to,
of course,
bring that forward.
Yeah.
So if you were to give any like sort of top tips to anyone that, not just sports people, anybody that was sort of thinking, well, okay, I want to add value to my portfolio, or I fancy getting into some property development or refurbishment, what would be your, you don't have to just give one tip, but what would be what would be your golden tip that you would sort of want to pass out?
I would say that explore your permitted development rights. So look, if you're an inexperienced property investor, buying a property and going through a planning permission process is going to be expensive, and it's probably one that's a bit maybe outside of the realms of your experience. So I'd say start with, you know, residential or mixed-use properties, and learn about the ways that you can add value. And that, as I say, that can be done in a number of ways. Commercial properties can be converted into residential under permitted development. Houses can be converted into HMOs under permitted development, and value can be added. Loft conversions, rear or side extensions, garage conversions. These are the ways that investors can engineer value without going down the planning permission route. Yeah. So that's one thing. And the other thing is, this is a kind of a theme of the conversation, is align yourself with the right people, a good broker, a good property solicitor that's used to commercial deals, an architect, a planning consultant, a contractor to help you do the works, and then a managing agent to help you let the property if that's your plan post-refurbishment. They're the professionals that can help guide you through a project.
Yeah, no, that's fantastic advice, and some real key takeaways there for me in terms of look to add value and build your power team. If somebody's listening to this or watching this, taking those two things away, that's a good use of their time, isn't it? In terms of, but not specifically build a power team, but who is in that power team. Yeah. To really help execute these projects. Yeah,
you might be surprised to hear that I said architect or planning consultant, but I think even if you're doing a PD, a permitted development scheme that doesn't need planning, it's still important to engage an architect or a planning consultant or both to make sure that what you're doing is within the rules. Yeah. Because the last thing you want to do is put a great big whopping extension on a property thinking that it falls under PD, and then the risk of enforcement action from the local authority, if it doesn't, could be really costly.
And I'd imagine what we're doing there is we're assuming, aren't we? We're assuming that there's no, there's PD there, planning, permitted development. But I'd imagine there are probably quirks on that, is there not? Like in terms of, I think I had a situation recently where the client's extension connected to the garage, so then that created a situation where he needed planning. Yeah. I'd be correct in thinking that, these little assumptions.
Yeah, and there's rules around light. You can't obstruct a neighbour's light, proximity to a neighbouring house, the height of the building, the external appearance of the extension. So it's not a slam dunk in that, I can do whatever I like as long as it's within 3 meters.
Yeah.
You need to make sure that what you're doing is within the rules, but that's what a good architect should be able to tell you.
Yeah.
If you follow these rules, and obviously they can align with your contractor to make sure it's built out in the right way, then you would be not falling foul of the planning rules.
Yeah, fantastic. So key takeaways there: look to add value in the different ways, and then lean on a power team and those various cogs in that wheel to bring that forward for you. So, no, Josh, and where, if somebody was interested in sort of reaching out and getting in contact with yourself, what's the best way to get in contact with you?
So we're at octanecapital.co.uk. We've got a team of people like myself to help brokers and investors find the right funding they need. And just to touch on what we actually offer, if you're buying a property and adding some value, we lend up to 75% loan to value net day one.
Okay.
That net point's really important. We don't deduct interest.
It is important, yeah.
And then we also fund 100% of build costs. So theoretically, if your numbers are right, you can do a whole project with just over a 25% deposit with us funding the rest.
Okay, so on that one then, so that is a real USP, isn't it?
Yeah.
In terms of, from the client's perspective, to go, right, I've got my 25%.
Yeah.
That's going to be very property specific though, isn't it? It's going to be a case of, right, well, actually I can get it at a cost.
Yeah.
But actually, because I'm going to do X, Y to it, it's going to create a Z value. So it's going to be going to need to be the right type of property, isn't it?
Yeah.
In terms of, but that's a real standout from a customer's value perspective, isn't it? Yeah, fantastic. So no, thank you very much for coming on. Really appreciate your time today.
Thanks, Ross.
And like I say, if anybody is interested in reaching out to myself or Josh, then you've got the contact details there, and we'll put it on the link as well. So thank you very much.
Thank you.
Thank you.
Cheers,
man.
Thanks,
Cheers.
mate.